Connect with Nischal Maheshwari as well, who's joining in on the show this morning. Hi there, Nischal. Good to have you. Let's begin by discussing your take on RIL's AGM. What do you think market participants will really be watching out for, given that this time there's no big bang new announcement that at least seems to be expected?
Hi, morning. I think the one thing, obviously, the market and everybody is waiting for is basically what's going to be the plans for Geo, which has just got listed a couple of days back. And I think after the listing, the prices have reacted to whatever levels. And then we saw last Friday very aggressive buying by some of the mutual funds. So I think that's going to be what is going to be really looked out for. I think another thing which people will look out for is there any indication for further listing of other subsidiaries like retail and telecom. So I think these are the things basically market is going to look out for in this AGM.
Okay, fair enough. Let's also understand then from you, Nischal, what your outlook is when it comes to the entire railway and defense space. We were just mapping out the year-to-date returns earlier this morning, and they've really been on a fast track. Do you think that now is the time to partially profit book, or do you think that the road ahead still looks exceedingly promising?
So it depends upon what kind of time horizon one has, basically. If you are short to medium term, I think you can take away some profits from the table. But if you are a long-term investor, then I think most of them have very good order books. And the outlook, especially from the railways and defense, continues to be very, very promising. So if you are a long-term investor, I think just remain invested. There will be years where things are not going to be as strong, as good as what we've seen in the last 1 year, but you have to keep the faith. So, and there is a long runway in both these sectors. So no worries, basically, if you're a long-term investor.
Continues to see a pouring in of new orders. I mean, BEL has had orders worth 3,200 odd crore rupees in the month of July, August. BHEL 2,242 crore rupees from NHPC alone. GR Infra has seen the joint venture has won an order worth about 3,637 crore rupees, and BEML as well has had contract for export worth about 163 odd crore rupees. So I guess the fundamentals of the entire sector look intact. But would you say that stick it out with the largest L&T within the sector?
So, if you are talking about the construction space, then I think basically 2 or 3 of them is what we like out there. One is obviously L&T, but the other stocks which we like is PNC and HG Infra. So that is the stocks which we like basically as far as construction is concerned. But overall, if you look at on the capex side or the capital goods side, then I think there are some good stocks basically even in the smaller category. Triveni Turbine we continue to like basically, and then Apar Industries is what we like. So there has been quite a few smaller ones also, which still continues to be fairly priced, not very aggressively priced. So these are the stocks basically which we like in the capital goods sector. Yes, the order books have been very strong. But I would like to highlight one thing here is the construction side of the business. Basically, the order books have been slowing down. Especially the order outflow from NHAI is down 40% on a year-on-year basis. And that is maybe a slight cause of worry.
Financial services on Friday, and the prominent there is Motilal Oswal Mutual Fund. They bought 3.7 crore shares. Nischal, whether it is today or tomorrow, or whether it is this week or next week, one day the index selling, which is the compulsive selling in Jio Financial Services, will get over. Whether it is 180 or 170 or 200, nobody knows. But then what happens after that, once that compulsive selling is over?
So I think the stock will find its real value basically once this compulsive selling is over. I believe this is where we are today is more or less it's real value basically. Because at around, if my numbers are right, I think 1,30,000, 1,35,000 crore is the number. And that is, if we assume, though technically it is not right, but if we assume that 1 lakh crore shares of Reliance is actually available for us as a net worth, then you are saying the price to book of Geo is one time actually 1,30,000 crores, 1,40,000. That's a kind of 1 to 1.1 times basically. That's what the Geo is. And then we know basically the reach of Geo, the backing of the group, as well as their vast other businesses which will all support Geo basically in this endeavor. So all in all, looks very positive to me. I think every fall in Geo should be looked as a buying opportunity.
So Nischal, at what time, at what price, then this becomes more like a buy for long haul? Is it at the current juncture, or you'll have to wait for a 5-10% decline, maybe 15% decline, even if you're buying in a long haul portfolio?
So I am Nikunj, in a long-term portfolio, I wouldn't bother basically for the next 5-10% fall. I would rather actually start nibbling away basically, and every 5% fall, I'll keep on adding. So I would actually go out and buy maybe 25% of whatever I wanted to buy today. And thereafter, every 5% fall, I'll keep on adding another 25%.
There's a block deal in Zomato, and in Zomato and in Paytm, there is one large investor, and that actually is Ant. And Ant has been reducing their exposure. They had a large exposure in Paytm, they have exposure in Zomato, and they've been reducing their exposure. In Paytm and Zomato and in Policy Bazaar, a lot of PE investors had sold at the beginning of the year when they were compulsive sellers. They were selling without thinking, they were breaking the price. Now I think more sensible levels have come back, and that is where I guess some of the PE investors are selling. I don't know who sold here, but if I connect the dots here, considering that what happened to Paytm in terms of Ant Financial's exposure versus they have exposure in Zomato, it really could be one of those. Nischal, Paytm becomes a very special situation stock now. Business has come back, and financial overhang is getting over. The big supply which everyone feared now seems to be ebbing down. Independently, if you have to look at the technicals and valuations and the business dynamics for Paytm, is the best for Paytm yet to come now?
Definitely, Nikunj. I think we have not seen anything basically as far as Paytm is concerned, and I've been maintaining it from day one. Basically, yes, the stock went up, went down. What you have to understand, Paytm is sorry, I'm talking about Paytm or Zomato. Sorry, those are my views about Zomato actually. Sorry, I was thinking you were talking about Zomato. Paytm, yes, at these prices, I think one has to go back and look at it basically that what kind of business they are, what kind of business outlook they are going to actually present. Because now Paytm is going to be competing with the likes of Jio and several other businesses which are all in similar spaces. So that's why I think one has to be very sure about Paytm, whether they want to own it or not. I wouldn't be owning Paytm at these prices.
Okay.
In the meantime, we'll also have, also keep a spotlight on some of the stocks that did manage to fire up on Friday's trading session, and that within the broader market space. So just highlighting some of those names that should just come up for you. And just wanted to get in your take then, Nischal, as to what the outlook is when it comes to stock picking within the broader markets, given the fact that we have seen that very smart rally play out. That outperformance has been evident within the mid and the small caps. Are you being very selective, and if so, where?
So I continue to believe basically that this market is on every dip basically is worth buying. And my view still continues to remain basically that yes, we keep on seeing whatever is happening in the US, but the broader trend in the US is inflation is down and interest rates are about to peak out. So that is positive across the world. So that's why I continue to believe that we should be focused on. But the other thing I want to say is basically it should be focused on to the domestic driven stories. So we are positive on banks, we are positive on FMCG, autos, then cement. The only sector which we like export oriented is pharma. But I think the other sector is what I highlighted.
Get in your take, Nischal, on the entire life insurance space. What's the outlook given that recent reports seem to suggest that valuations are looking reasonable, that the VNB could double over the next 4 to 5 years? Where within this space are you finding comfort?
So we like the space. The only thing is basically there is severe competition actually, and that is what keeps us looking for stocks in the space basically which are reasonably priced. And our top pick continues to remain as SBI Life in that space, and then we like Max and then HDFC Life in that order, but positive on the space.
Nischal, LIC is doing everything right. They are giving dividends. The Adani fiasco in terms of the mark-to-market losses, that is over. The numbers for the quarter gone by were decent. Valuations are strong. Market share is coming back. But stock chalta hi nahi hai. Every PSU stock is up. Defense is up. Railways is up. Power is up. LIC does not go up.
So I think one thing is, as I was telling you, there's huge competition basically. Yes, they are getting back their market share or holding on to the market share. I'm not really looked at the recent market share of LIC, but I think they're holding on to the market share. But the competition is really severe in LIC, in that insurance space. And the second thing is basically that is the one large company which is still available with the government to actually keep on coming in. I think the stock overhang. So as and when government finds a good price, I think government will take away some more into the market. And I think that is where the market fear is basically that at all higher prices, I think you will continue to find supply. And that's what is keeping the stock, I'm saying, down for the moment.
Zee Entertainment, and that continues to be a work in progress with respect to now the matter with SAT against the SEBI order that Puneet Goenka has moved. So the Zee Sony case continues to remain on tenterhooks up until then. But just what is your outlook, Nischal, on how things have played up, the kind of movement and volatility that we've seen in the stock price of Zee Entertainment? What does the shareholder do?
I think hold on. I think it's hugely underpriced. We go back and look into history. Basically, I think Zee has been at a 35, 40 kind of multiples. This whole recent thing, basically, Sony coming in and Puneet Goenka's issues, basically has actually pulled down the multiple to abysmal levels. So I think there's a good stock. I think the market leader, as far as if the merger goes through, it looks like more or less it's going to go through. So they will be the market leaders in the entertainment space. So I think one should hold on to this stock.
Okay, a market leader in the entertainment space. So I guess that's Nischal's view that one should be a little bit patient and just ride it out. All right, Nischal, good to have you on board. Thanks much for joining in and sharing with us your outlook on the markets. What's happening with